This is the best retail strategy in the market with an astonishing 90% win rate. Here is how to use it with 3 simple criterias. 1. Identify a range on the 1 hour, 4 hour, or daily time frame. This is formed by marking out your support and resistance zones. The ranges tend to be respected more on the higher time frame as compared to the lower time frame. Criteria 2. Ensure that the support and resistance for the range has minimally 2 points of contact. The more times the key levels are rejected, the stronger the key levels are. Criteria 3. The range must be at least 100 to 150 pips wide. An ideal range occurs when price moves smoothly from the resistance to the support, and vice versa. Now that you know the exact criteria to execute the strategy, let's take a look at how to execute it on the charts. Here on the pound Swiss franc pair, price has created a 4-hour range between the support and resistance as seen in the charts. That meets our first criteria. The next criteria is for the support and resistances to have at least 2 touches. As you can see, both zones have at least 2 touches. And our last criteria before we look to take our trade is that the range is above 100 to 150 pips wide. The range is about 100 pips big, so that gives us the green light to look for trade. Since price is at a support, we are looking to buy. So we see that the latest 4-hour candle has rejected the 4-hour with a very long wick and closed bullish, giving us a bullish doji candle. This is our confirmation to enter. So I place a buy here with stop loss below the zone and target the resistance. Very simple trade. Let's see how it plays out. There we go, TP smashed.